Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, July the 7th. My name is Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. Well, I do the same thing in these daily market commentaries, but I'm layering on top of it option strategies that I find based on that economic and geopolitical environments and how that's impacting the overall markets. In my webinars, I go into the details as to what my guidelines are for setting up any option strategy. If you have a bullish strategy or a bullish assumption, there's specific option strategies we should be looking at to implement in and around that assumption based on these guidelines. It's not just going out and buying calls every single time. So check out those webinars. Find out how those mechanics of all of these levers and pulleys that go into options work for you and against you. So check those out. I'll talk about a little bit of that. I've got a great example of some of those today. But further, let's get on with the economic data across the pond. Really not a whole lot to see here. As a matter of fact, the economic data after yesterday is going to be pretty light in regards to importance. But here in the United States, we did get JOLTS job openings. Came in a little bit better than expected at 5.4 million, expected to be 4.7 million. Keep in mind though, we're starting to see another round of lockdowns in a sense where people are going to actually be maybe seeing a second round or a second wave of layoffs, closing gyms, restaurants, and public spaces like that is going to hurt. And, you know, although they may have made it through the first bout, the second bout could be the knockout blow for some of these guys. All right, the rest of the week, though, we do have a couple here and there, but for the most part, that's about it for economic data. We will be looking forward to seeing crude oil inventories tomorrow, though. Speaking of crude oil inventories, right now, $40 a barrel, almost 41 as we speak. Market wants to hold on to the 40 handle. Now, tomorrow could be a main driver of crude oil as we're going to see what those inventories are. If we continue to see a drawdown, which is what we saw the last time, that will give the bulls a little bit more room to the upside. I've been talking about this in this type of economy with the manufacturing sector kind of sputtering to get started. Well, crude oil is probably going to suffer based on that. But as of right now, it's moving higher, and we've got an 18 handle on gold futures right now, up $14 into that 1800 handle. Now the market really starting to stretch out to the upside. Part of this is not just because we're seeing a little bit of weakness in the equities, but we're seeing weakness in the dollar, and this is a dollar denominated product. This type of commodity is going to spike based on weakening dollar and uncertainty in the environment, in and around our economic environment, I should say. And that's starting to be something that's coming out a little bit more right now, especially with the second round of lockdowns that I'm talking about, or government mandates. That is going to cause the economy some pain. We've got the bonds right now moving up about a half a point on the day, right there at the point of control for the volume. And now that is still price acceptance. As a matter of fact, I meant time, not volume. Volume's still definitely below where we are, but on the floor we used to really look at the time nodes where that was acceptance of value, and therefore you might not trade as much when you think you're right there at value. So we're seeing a little bit of that complacency going on right here in and around this area, but you've heard me talk about this for quite some time, probably 2-3 months at this point, that we are probably at where we are going to stay for the foreseeable future. Maybe some spikes here and there, in and out, outside of what is realistic. But at the end of the day, Jerome Powell saying interest rates aren't going anywhere anytime soon. And that leads me to believe that we are going to stay right here between the 61 Fibonacci and the 78 Fibonacci. All right, VIX is coming off from its highs, still positive from yesterday. I would expect to start seeing the VIX start move a little bit higher. We're starting to see some volatility in and around underlyings that I've been looking at start to spike a little bit. And that's basically a sign that people are starting to buy some puts up at these frothy levels in some regards. We're seeing the NASDAQ with a new all-time intraday high. Tesla, which we'll talk about here in a minute. So some of these stocks are starting to see some volatility spikes going on. We've got the Dow Jones Industrial Average off by about 230 points on the day. NASDAQ is positive. You know, we're going to have to keep an eye on this little setup here. You know, sometimes that looks like a pause. Sometimes we could make that a topping pattern. Tomorrow is going to be key. Well, today is going to be key to how that really looks. Even if we finish at the high of the day, that's going to look very toppy, I think, and especially if we finish at the low of the day. Right here is right where it kind of gets a little bit vague as the bulls and the bears are battling it out. You know, tomorrow would have to be the confirmation day on whether it's going to be a continuation pattern. Right now, it looks like a continuation pattern. Earlier today, though, it was looking kind of bearish. All right, we have the E-mini S&Ps. This chart pattern setup starts to look a little bit more bearish to me. Again, we're going to wait till tomorrow to implement something around this. Maybe. It depends on, I actually will talk about that here in a minute. I'm usually a little bit early, and as you guys have seen recently, got in a little bit early on Tesla and SPY. I dumped them out when it broke through my chart setup. But today, it's starting to look very similar where it's a little bit toppy, and with my assumption that the market is a little bit toppy for the type of economic environment we're in, it seems to me that there needs to be a little bit more of a correction coming down the pike pretty soon. So we've got E-mini S&P slightly off on the day by about 10 points. You can see overnight inventory very long. Really, this bearishness coming into the market wasn't really anything other than maybe some news-driven stories of more coronavirus. Nailed down to the low. So I think overnight inventory was very short. It's coming into the day. We flushed out those shorts by rallying. Now we're starting to see the market correct a little bit. Not an inside day. It's pretty hard to read what's going on other than if you look at the daily charts. To me, it's starting to set up like, okay, we've kind of topped out just a little bit. So talking about what I'm looking at with SPY, I'm looking at putting on those 300 puts again, you guys. I put a bid in there to buy these, so I'm kind of just trying to get in where I got out yesterday, and we're trading right around where we are. Now, the SPY doesn't look like it has great chart setups here as opposed to what I'm looking at with the E-mini S&P futures. So that being said, I am looking to buy some 300 puts at where I got out, which was right around $8.40 is I think where my bid is currently. So I am still looking to put these back on, despite the fact that I popped out of those yesterday when we broke above my area that I was going to get out in. Well, now it's starting to look a little bit bearish, and I'm going to try and get back into those puts. Right now, those puts are trading higher, and I don't want to chase that market. All right, Tesla, again, same chart setup. Now, I talked about this a couple of days ago when we were looking at Tesla, and this, you know, the catalyst for getting me into this trade was basically looking at the chart setup right here. When you get that pop, you know, that starts saying, hey, all right, you know, the shorts are starting to puke out. Well, then yesterday we even got a further move where there was an analyst, and I can't remember who it was, said 1,500. Well, today, again, another analyst said 2,000. And I'm sorry, but I'm just in the camp that I can't believe that Tesla is worth more than Toyota, who produces 10 million cars a year, and Tesla only produces 500,000. So to me, it's a little bit overdone. Yes, I get the fact that Tesla is a tech company. They have autonomous cars, and that infrastructure in and around the autonomous cars, the tech part of that is very valuable. Is it making it more valuable than what Toyota is? I mean, the programmer probably could leave Tesla. As a matter of fact, one of them did. That was part of the Model S. He left and started his own company, Lumid or something like that. Anyway, he's supposed to be coming out with a new car that's autonomous, and he's worked on the F1 electric vehicles there as well. So he's supposed to come out with a pretty sweet sedan there. But anyway, with that being said, I think Tesla is just a little bit overdone to the upside. One thing to note here is those Tesla puts that I had bought are actually worth more today than where I got out of them yesterday. Remember, I bought some Tesla puts. I sold out of those Tesla 1,000 puts in the September. I got out of those at $51 and some change. Today, they're trading upwards close to 60, and that's just based on that volatility move higher. The directional move was higher as well, but it was, almost completely offset by the volatility spiking. So, kicking myself a little bit for getting out of those. But listen, at the end of the day, when we're going into these trades, we can only control entry and exit, right? And my exit was getting out if we went above this chart setup, which is what happened. We popped above that. I'm getting out of it. Now, throughout the day, that volatility continued to rally up and would have probably saved me a little bit of money, but hindsight's 2020. We can learn from these a little bit. Usually on those kind of moves to the upside, we're not going to get that volatility spike like we've got in here. So I'm probably not going to be going out there and buying those same puts in Tesla. I'm actually starting to lean a little bit towards selling some calls. The interesting thing is, like, the highest level I can sell are the 2,000 calls, which I wanted to go a little bit higher than that. That 2,000 call is only about a 27 delta. I like to short at the 16 delta, in which I'm not being able to trade those on TD Ameritrade. It's too high, which is strange because you can buy Tesla puts all the way down to almost zero, it seems like. But with that being said, I am still considering trying to short Tesla. How I do that, probably not buying puts, but short deltas by selling some calls is really where I'm leaning. So I'm playing around with that, keeping an eye on it. I don't want to pay up for those puts too much with all that volatility in there, right? We don't want to buy high volatility. I talk about that in the webinars. We want to sell high volatility because you're selling premium then in that case. When volatility is really high, that's when those premiums are at their highest. So I want to be selling high premium and buying low premium. And right now, the premiums are jacked up in the volatility because of the volatility created in the last couple of days here in Tesla. But I do really like the idea of finding some short deltas with Tesla at these levels. So I'm still keeping an eye out on them. Haven't done anything in either trade, but trying to get my my September puts in SPY. So I'd like to get involved in that for the longer duration, trying to buy those SEP 300 puts. All right, that's about it so far today. That's all I've done. Haven't put even in a trade for Tesla, although I would like to come up with a strategy sometime today for shorting that, because to me, this type of pattern up here at the top, that is definitely, after especially getting those two gaps, it needs to correct a little bit. Doesn't mean that it's not going to go to 2,000. I'm not trying to say that, but what I'm saying is there's an opportunity here, I think, for at least a correction back down to close to, let's say, covering this gap, which is 1130, let's call it. So that's what I'm looking at. A couple hundred points below us where we are now. That would be a nice little win in the trade column for my Tesla trades. All right, that's all I got. Check out our disclaimer here. I'm not trying to influence your guys' decision by the way that I'm talking about Tesla, SPY, or any of these other markets that I've gotten involved in. The idea here is my thought process, what we're going through, and how that leads to the option strategy that's appropriate for that. Now, that's the key here. You know, your directional assumption in Tesla might be completely different than mine, but what makes the markets work is that we have different assumptions, for one, but two, make sure you're getting involved in the right option strategy for your directional assumption. If you're bullish in Tesla, well, maybe buying calls isn't the best option strategy for that type of directional move. Very well could be. Volatility could continue to spike, all right, if you're buying those calls. That would help you out, plus you get the directional move correct. But if volatility starts coming out, even if you're directionally right, that could hurt you. So go to check out those webinars on how to build an option strategy and learn there is a right place, a right strike location, and a right duration that you need to come up with for that given underlying. All right, that's all I got for you guys. Make sure you, like I said, read over this. And if you can't take that, take it easy.